Good afternoon, everybody. Welcome to part one of the home buying presentation webinar series of the spring presented by Affinity Federal Credit Union. Today's topic is the cost and fees, part one. My name is Oscar Cordova, and I'm the External Affairs and Financial Education Manager here at Affinity. I'm in charge of the financial education efforts of the credit union focused in the areas that we serve. Before we begin, I would like to go over this brief disclaimer. The disclaimer states that the information provided to all of you this afternoon, it's intended to be it's intended for informational purposes only. It is not intended to be actual legal, tax, or financial advice. Now, this is a home buying webinar, so with the home buying, eventually you will want to talk to a mortgage loan officer. So we'll be more than happy to provide the information required for you to make an appointment and see a home mortgage loan officer, right? Today's presenter, her name is Carolyn Morgenbesser. Carolyn is our AVP of Mortgage Originations. She leads a team of 18 mortgage loan officers who work diligently to provide the best experience for our members. Carolyn has been in the mortgage industry for over 35 years. She loves assisting members with achieving their dream of home ownership. As a reminder, this webinar is being recorded, and the link to watch this presentation again will be shared with all of you in a follow-up email that will be sent in the near future. Also, if you have any questions that you would like to ask during the presentation, feel free to use the Q&A option on your panel, and Carolyn will be more than happy to address these questions at the end of the webinar. As a final note, I will also be sharing important links throughout the webinar in the chat for all of you to access important information about the home buying process, as well as other valuable resources Affinity has made available with your membership. With that said, thank you so much, Carolyn, for joining us this afternoon, and I'll turn it over to you.
Thanks, Oscar. I'm having trouble with my technology, so I can't go to full screen mode. You'll still get the full benefit of the presentation, and it will be emailed to you, but I do apologize for the technical difficulties. So let's dive in. Here are the upcoming webinars. So this is today's. Part 2 and 3 are the 24th and 31st, and then credit and what you need to know is on June 7th. One of the biggest steps is knowing if you're ready to purchase a home. It's a huge decision, financially, emotionally. This is the time to decide, am I ready? How can I go about it? And how can I make it as stress-free as possible? There's always stress involved. I'm not going to lie, it's a huge decision, but we here at Affinity try to help you reduce the amount of stress, and knowing before you go is a huge part of that. I don't know what is going on with my presentation. I'm sorry. It's just not working. Hang on a minute. I have to sign in. I'm sorry. I'm sorry, everyone. Oscar, I'm going to have to VPN in because this is not working. All right, everyone, sorry for the technical difficulties.
Carolyn, I am emailing you the...
You have to sign into the email, so you got to give me a minute. Yep, yeah, doing it now. Sorry, everyone. We're going to answer all your questions at the end of the presentation. Use the Q&A. Try not to use the chat. Q&A, Oscar will upload links to the chat for you to view. Hold on a minute. I'm just sorry. Okay, everything's not working. Okay, here we go. All right, here we go. Let's see. Okay. All right, I'm in.
Okay, Carolyn, you should have the presentation in your inbox, the not the PDF version, the PowerPoint version. Folks, thank you for your patience.
Sincerely, thank you for your patience. Can you still see my screen or no?
No, not yet, but I did send you the PowerPoint version of the presentation to your email.
Hold on, I got PowerPoint. I'm trying to view full screen.
And you should share your screen now.
Hang on. Trying to get full screen, Oscar. I can't get full screen. Okay, I think I got it. Let's see, everyone. We're going to try this. Okay. Can you see it?
There you go. Now it looks perfect.
All right. Okay. All right. Oops, that's an old one, Oscar, but that's okay. That's okay. All right. So before you start looking for home, there are a couple of things that you should know and do. The first is check your credit. Legally, you have a right to all 3 of your credit bureaus once a year at no cost to you. This is, you can get this at annualcreditreport.com. Sometimes they give you your score, sometimes they don't. If you're obtaining your credit, just to review it and make sure there's no dings on it. And by dings, I mean inaccuracies. And they happen because credit reports are based on data entry. Data entry is done in a lot of instances by humans. We make mistakes. We're an imperfect people. Think how boring the world would be if we were perfect. So you're looking for any erroneous late payments. You made your payment, the creditor reported you late. You want to take that, you want to address that prior to applying for a mortgage. And your loan officer can help you, and we're here to help you. And you'll hear me say that several times throughout this presentation. How much money do you need? This is huge, especially today with interest rates where they are today, with real estate market where it is today, not a lot of inventory. Interest rates are higher than they've been in years. This is going to be very eye-opening for you. I don't do this to scare you. I do this to prepare you. I want you to go in knowing what you need, how much it's going to cost, and where you fit into that, where it fits into your budget. Now, there are low down payment and no down payment options available for qualified buyers, but you still need money. You still need cash, okay? We're going to look at a loan in the amount of, okay, so these are the closing costs, okay? And I jump ahead in my presentations always, which is why we give you a copy of the presentation, because we want you to have this as a guide. So these are the costs that can be associated with your mortgage, okay? We here at Affinity don't have an origination fee. You could pay points to obtain a lower interest rate. That's an origination fee, but that's an option. Other institutions have origination fees just for applying with them, okay? We don't have that. So here's a list of your fees, okay? All of these fees are not charged by Affinity. In fact, these are all what are called third-party fees. So these are fees that are charged to us. We simply pass them on to you, the buyer. Again, non-lender fees, right? But there are other fees that really nobody talks about, but they're not considered closing costs, but you still have to pay them. So if you're purchasing in a state that uses attorneys, you'll need an attorney to represent you. The credit union's always going to have an attorney to represent them, us. The seller, if it's an attorney state, will have an attorney representing them, and you, the buyer, would have an attorney representing you. There's your home inspection. They check the foundation, electrical, and condition of the property. If you have a well on your property, the well inspector examines the equipment and tests the water quality. If your property has a septic, we're going to require a septic inspection that tells us that the septic is in good repair. And escrows and prepaids, these are not considered closing costs, but you are going to pay them at closing. So we want you to be prepared. There's nothing worse, in my opinion, is thinking that you're ready to purchase a home. You've worked and scrimped and saved, and you think you have enough, and then you talk to a mortgage loan officer and you find out you're short of funds. This is why I want to avoid for you. So we're going to define the fees, okay? The origination fee is what you pay to obtain a loan. I mean, it's that simple. Appraisal fee. So we, the credit union, or any lender, we do not know, we are not by law allowed to know who the appraiser is until after the appraisal is done. And the reason for this is because there can be no impropriety. If we don't know who the appraiser is and we don't know when it's scheduled for, we can't meet the appraiser there and tell them what we need the appraised value to be. Okay, so we use a third-party vendor. They're an appraisal management company. They have a roster of appraisers on their lists, and they will farm out your job, your particular appraisal, to the appraiser. When the appraisal is done, that's when we know who the appraiser was. Tax service fee, this is a third-party vendor. We contract to monitor the taxes on the home throughout the life of the loan. It ensures that they are paid in a timely manner. Flood certificate, after Hurricane Sandy, FEMA went and redesignated flood zones. We get a flood certificate on every loan that lets us know whether or not the property is in a flood zone. Verification of employment, it's another third-party vendor. Most lenders use these now. We use the main one, the most commonly known one, is called the work number. A lot of big companies use them, AT&T, Verizon, to name a couple. We verify your employment, your continued employment 10 days prior to closing. I cannot tell you how often we have used the work number and the person is no longer at their job. We're going to tell you always, do not quit your job. When you're purchasing a home, don't quit your job. Don't incur any new debt. Don't buy a car. Don't do anything from the time you apply for your mortgage until the time you sign on the dotted line. IRS tax verification fee. This is a fee charged by the IRS to lenders to provide them with a copy of your transcripts. If you're purchasing a condo, there are condo fees that are charged by the condominium association. Okay, it's not a credit union fee, but the law says we have to disclose these fees to you, so we count them. Condo, we have to obtain for condos, co-ops, planned unit developments. We have to obtain a copy of the budget and the financials. We have an independent company that will go out and get them for us. You, the buyer, have the right to get them yourselves. I'm going to tell you that most buyers come back to us and say, just get them, because it's a lot of legwork in some instances. And the fee is a nominal fee. It's like $395. And they just don't want to do it. So, but it's your choice. You can get it if you want. Again, attorney fees. We're always going to have an attorney representing us. You, the buyer, don't have to have an attorney if it's not an attorney state. One of the Carolinas, or both of the Carolinas, don't use attorneys. A portion of Florida doesn't use attorneys. New Jersey does use attorneys. Pennsylvania, New York, Connecticut, those are all New Jersey states. Survey is like a property map of the meets and bounds of your property. If your property that you're purchasing has had a survey done in the past 10 years, we can usually get the title company to endorse it, and then you don't have the survey fee, but we disclose it just in case, because we don't know going in. Title insurance, this is a big one. When a property is financed, bought or sold, a record of that transaction is generally filed in the public archives. It's the county clerk's office, the property records office. It has many names. This title insurance policy goes back to when that property became a property, when it was deeded, and it will have the chain of title. This is to make sure that nobody can come up and lay claim to your property at a later date. So it's very important. There are two types of title insurance, a lender policy and a buyer's policy. The buyer's policy is yours, the homeowner, future homeowner. You only have to get that once, and it's relatively inexpensive when you compare it to the lender's policy. If you're buying in an attorney state, your attorney's going to order both policies as a matter of course. They just do it. if you refinance your home, which many people do, you don't have to get another owner's policy. Your owner's policy is good for as long as you own that home. Anytime you take a mortgage, you're always going to have a lender's policy. And again, these slides are going to be provided to you, which is why I'm not reading everything word to word. And I just find that a little bit boring. I'd rather talk to each topic and then save time for questions at the end. And I apologize for my scratchy voice. I have a little bit of a head cold. I'm just going to take a drink and then I'm going to be right back. Okay, thank you. Escrows and prepaids. This is a little bit confusing, so I'm going to spend a little bit of time on this. When you have a mortgage, you're going to have an escrow account. It's a savings account that's managed by your lender. So when I refer to lender, I'm always going to refer to Affinity, right? Because that's who I work for. We're going to deposit each month, 1/12 of your mortgage payment is going to be deposited into your escrow account so that we can pay your upcoming real estate taxes and your homeowner's insurance when they are due. So let's say, I'm just going to use round numbers, it's late in the day. Let's say your total mortgage payment, principal and interest, taxes and insurance, let's say it was $1,500 a month. $500 a month of that $1,500 is your escrow. So every month, $500 is going to be deposited in your escrow account so that when your taxes come due, we can pay them. And when your homeowner's insurance comes due annually, we'll have the money in your account to pay that. The law says we have to have a 2-month cushion in your escrow account at all times. So what does that mean? That means that let's say your real estate taxes are $400 a month and your homeowner's is $100 a month. We need to have 2 times 500. So $1,000 has to sit in your escrow account as just in case money. Okay. This is every lender. It's not anything new, but it's something that you have to be prepared for, right? Prepaids are the upfront cash that you're going to have to pay for property taxes that are due within the next 3 months. Private mortgage insurance, we'll talk a little bit more about that. Anytime you put less than 20% down on the purchase of a home, the lender is going to take what's called private mortgage insurance. It ensures the difference between the desired 20% down and whatever you're putting down. So let's say you put down 3% to purchase your home. We're going to take 17% coverage, right? The difference between 17 plus 3 equals 20. The desired down payment is 20%. Per diem interest is interest from the date of closing until end of the same month, okay? And I know this is confusing. It's very confusing. It's confusing to talk about. It's confusing to explain in this forum. Please use the Q&A. I'm happy to answer them. When you sit down with a mortgage loan officer, it'll become a little bit clearer because we'll have actual facts and figures to talk about your unique situation. Okay, now we're going to get into the meat and potatoes of this whole transaction. So a good rule of thumb is to use, back in the day, and as Oscar told you in his introduction, I've been doing this for over 35 years. So back in the day, when I started back in 1985, we used to use 5% of loan amount should be able to cover your closing costs. Now we're up to 7% of your loan amount should cover your closing costs. And I say should, and I'm going to explain why, so bear with me. The 7% would cover your earnest money or down payment, closing costs, prepaid escrows, and the non-lender fees. We're going to use a purchase price of $360,000. So we broke it down. 1% is $3,600, 2% is $7,200, and 3% is $10,800. So 3% we're going to use as your earnest money or down payment of $10,800. Okay. So we use 7% of $360,000. That's $25,200. Right. 7% is what we're estimating all your cash outlay to be, including your down payment. So when we say 10.8 is 3% of 360, that gives you a loan amount of 349.2, which is our average loan amount right now. So 25,000 minus 200 minus 10,008 leaves you 14,400 to cover closing prepaids, escrows, and non-lenders. Think it's going to be enough? Let's see. I'm basing this on Affinity's lender fees because I work for Affinity and have and will continue to do so, okay? So your appraisal fee, the attorney review fee, the credit report fee, the employment verification, flood cert, tax verification, and tax service, all of those fees equal $834. 14.4 minus 834 leaves us with 13,566 left. Remember, you're going to get these slides, so you'll have these figures, but also I encourage you to speak to a loan officer. It's never too early. I don't care if you're looking today, tomorrow, or 18 months from now. Knowledge is power. Be prepared, right? So we have $13,566 left after down payment and the appraisal and other fees you cannot shop for. The title fees, which your attorney or in a non-attorney state, the title company or settlement agent is going to order this for you, take care of this for you. I'm using New Jersey because that's where we're based, okay? So title fees, including all the searches and endorsements and other things, and there's many, many things that go into this, equal about 3,315. So we had 13,566 left, minus the 3,315 for the title fees, we're down to $10,251. We based our numbers on a 30-year fixed rate at 7.875%. It has an annual percentage rate of 8.646. Now, what does that mean? The annual percentage rate has certain fees, such as title, amortized into it over 30 years. So your true rate is the 7.875. We use the New Jersey zip code of 07731. Your prepaids, so your per diem interest, your property taxes, your homeowner's insurance, and your PMI, your private mortgage insurance, you can see the figures, right? So per diem interest, when you apply for your mortgage, we're going to issue your loan estimate. On the loan estimate, we're going to estimate that you're going to close the first day of the month. So if a month has 31 days, you're going to pay 31 days of interest. If you close on the 16th of the month, then you're not going to pay 31 days of interest. You're going to pay 15 days of interest. So we're using worst case scenario always because it's better to walk away with money than to be short. So all these fees add up to $6,802.42. From the $10,251 we had, we're down to $3,448.58. How fast the money is going, right? Now we have to set up your escrow account, right? So we have to take 4 months. Remember, we need a 2-month cushion. And we're going to take 2 additional months so that when your next year's policy is due, we have that money in your escrow account to pay. Real estate taxes, we're guesstimating taxes at $7,500 a year. That's kind of average in New Jersey. That's going to depend on where you buy, city, state, and town. Again, we're going to take 4 months. That's $2,500. Private mortgage insurance, we're going to take 4 months at $175.60. All of those fees add up to $3,602. We're short, you guys. We're short $153.82. Now, remember what I said. Per diem interest, we estimated 31 days. If you don't close on the first of the month, we're going to go back. So it's $77 a day, your interest, right? So if you close on the 15th of the month, you're only going to pay 16 days of interest, and that would be $1,238, so you wouldn't be short. Homeowners insurance, we're estimating $100 a month. I've seen members get policies, they bundle it with their car insurance. I've seen them get policies for $70 a month. We don't know that going in, so we have to use worst case scenario, okay? The interest rate is based on a credit score of a range of 700 to 719, and that was a May 4th. Property taxes, we estimate at 7,500. Again, that's going to depend. So I don't want this number in red to frighten you. I just want to caution you, right? We started this thing with how much money? Do you remember how much money we started with? $25,000. And we're down to minus 153. It goes relatively quickly when you're purchasing a home. And again, I just went over all of this with you. You are the driver of your own train, right? So you don't want to close on the first of the month. On a purchase, you can work with the seller, right? Depending on their timeline to determine the closing date. Homeowners insurance, shop. If your car insurance company is not giving you a great rate, shop around. You have plenty of time. If the average closing takes 45 to 60 days, you have plenty of time to find your, a great homeowners insurance policy. We also offer the Home Advantage program. This is a realtor's program that we've contracted with realtors across the country. They will give you back 20% of their commission to be used towards closing. Okay. In certain states, Rhode Island is one of the states that does not allow you to get cash back at closing. I don't have all the states memorized in my head, but again, your agent can tell you that probably. So that's another way to get some funds for closing, right? If you have a 401k, we're going to request your statement. We're not asking you to liquidate your 401k, never would. Okay, but we just want to show you have some assets. That's all. Best advice I can give you, and I'm not being, flippant when I say this, I'm not being cavalier. I know how hard it is to save. More is always better. Save, 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 save. You may not need it, but isn't it better to go in knowing you have it? Should something arise? You're also going to have moving expenses, right? Maybe you're going to want to paint or purchase furniture, not before you close, always after. After you sign the closing documents, you could go buy your furniture. Do not do anything prior to closing. When you buy a home, unexpected things happen all the time. The water heater goes, the oven breaks, you always want to have that what if, that extra money. I cannot caution you enough, right? You don't want to just make it. You don't want to live for your house. You want to live in your house. You want to enjoy it. This is the link to the MLO page, mortgage loan officers. Their pictures are up there. My email is, I'll go back to the first screen, close your eyes because it's annoying. I'll go back to the screen with my picture. I'm happy to hear from you. I'm happy to answer any questions I can. You will hear from me usually same day, if not the same day, the next day at the latest. And with that, I'll open up for questions.
Caroline, thank you so much. Yes, this is the time that we have designated for questions. I have shared with all of you in the chat the different links that we have for you guys to access different information. We have the Home Advantage. There's a link there for Home Advantage. There's another one to get a pre-approval. The slides, if you guys want to see the presentation and not wait for the recording, they're also there. So feel free to access those links. Also, let me just take a look if there's any questions pending. There are a couple. So let's start with the first one. So what do you do if you're left with the leftover money?
Sorry, I hit mute. I'm leftover money from your down payment, the money you save for down payment and closing. That's your money. You can do whatever you want with it. I don't know if I'm understanding the question or if I answered the question properly.
Yeah, I think it has to do with when you were making all of those calculations,
Right.
If you're
the
short,
leftover money is yours, right? It's yours.
Mm-hmm. So then you can use it for moving expenses or
furniture, painting, whatever you want. Yeah.
Exactly. Very good. All right. Next question. Do you need to refinance to get PMI taken off once you have enough equity in it, or does it just come off?
That's a great question. So the answer is no, you do not have to refinance. There are a couple of ways. PMI will drop off if the property reaches 78% of the original sales price. So that's going to take some time, 5 or 6 years. If, and I tell my members this all the time, if you're a savvy homeowner, and you should be, right, and you know that real estate values have gone up in your area, you can request through our loan servicing department an appraisal. You pay for it. You have to pay for it to see if the value is there to get rid of your MI. I'm going to tell you that if you put down 3% in the scenario I demonstrated, probably you're going to have PMI for a year, a couple of years, but you can certainly get rid of it. Also, if you make extra principal payments, you're paying down your principal at an accelerated pace. The property values go up. You get a appraisal. You can get rid of the MI that way. So it does not have to stay on for the life of the loan, and you do not have to refinance it to get rid of it.
Fantastic. Next question. Can I get a loan to purchase land?
So there are land loans. We don't offer them. Usually smaller community banks offer them. But yeah, it's called a land loan.
Very good. Okay. Next, my relative wants to pass their house down to me and move to another country. How can I navigate this so I can still be eligible for an FHA loan or any other loans for the first-time home buyers?
So once you have title to a property in your name, you are no longer considered a first-time home buyer. And there is a question on the application that asks you if you had interest in a property in the last 3 years. So if they give you a home, you're no longer considered a first-time home buyer. There is no getting around it.
Excellent. Next question. Can all the links Oscar has provided in the chat be included in the email to be sent with the presentation? Thank you. Yes, I can provide these links to our marketing department. They're the ones who send out the follow-up email, and I'll have them include the links to the email. If for some reason they are unable to, I still want all of you to receive the link. So what I'll do is I'll pull out the attendance sheet and I'll just add the links to an email and send out an email to all of you who attended tonight. Okay, thank you so much. Next question. If self-employed, how do you check employment and what information do you need?
So we will need your last 2 years business and personal tax returns, all schedules, a year-to-date profit and loss. It does not have to be audited by your accountant. It does have to be signed by you. And we'll average your 2 years income from the previous 2 years.
All right, excellent. Next question. If you have excellent credit, 830 plus, how would that help reduce the interest rate in today's market?
So 800 credit scores, A+ credits, the best credit you can have. You'll get the best rate we have to offer at time of application. What pricing is done, it's called risk-based pricing. And there are like 6 tiers now of available interest rates based on a range, right? This is why I use the range of credit scores that I use, just to give you because 830 is not a common score. 700 to 719 is a lot of what we're seeing now, but you'll get the best rate available at the time of application.
Right. My credit balance went up to 31% of usage, and this dinged my credit score down significantly. During the home buying process, will my credit be monitored on a weekly basis or captured once a month?
So what happens is once you apply for your mortgage, we run the credit pull. We do a tri-merge. So that's Equifax, Experian, and TransUnion. We do not monitor your credit every month, every week, every day. We do a soft pull within 10 days of your estimated closing date. And that's how we'll know if you apply for any new credit, which is why it's imperative that you don't. We don't want to see any new inquiries on your credit. If your credit got dinged, and I'm sure it did over the, because you're over the desired 30%, work on getting it down. And depending on when you're ready to purchase a home, you might be back up to where you need to be.
All right, next question. On the Home Advantage website, many of the homes are already sold. Do you know how often the website gets updated?
I don't know how often it gets updated. I'm sorry. I will tell you that the homes are going like relatively quickly. We just had one in New Jersey. It went on the market. It had 42 offers the first day it went on the market. That's how, there's just no inventory. So it might have been updated. I would guess it's updated once a week, but if you want to email me, I will find that information out for you tomorrow.
All right. Next, if I get cash from the sale of a prior property, can I make a lump sum payment towards my mortgage? What are the pros and cons of that?
So I'm gonna base this answer on the fact that you sold a property, you have a home you own now, and you want to make a lump sum payment on your mortgage. What's the con of that? I can't see any con of that because you're saving yourself interest, you're increasing your equity in your home. Those are all good things. Those are all pros. I'm also going to assume you're keeping a little nest egg from the sale of a property for the what if money. So I don't think anything bad, honestly.
All right. What about first-time buyer help?
I don't know what that question means. I'm thinking maybe you're talking about down payment or assistance or something like that, or grants.
Yeah, exactly.
There are those out there. We have a gentleman named James Goodman. He specializes in that, and I'd be happy if you want to email me and let me know that you're interested in down payment of assistance, and I can help you with that.
Okay. What would I be able to buy property out of the country?
We only lend in the US of A.
Okay. Out of all of the calculations, what will be the monthly based on the number we used?
Hang on a second. Let me get the number we use and I'll do that right now. I should have put that in. All right, so our $349,200 loan amount, 30-year term. What was the rate? It was high, 7.875. So your principal and interest payment, $2,531.94. Now we're going to add your homeowners of $625. Real estate taxes of $625. Your homeowners of $100, and your private mortgage insurance of $175.60. Total monthly payment, $3,432.54.
All righty. Okay, next question. What is the minimum credit score to get approved for a home loan?
The minimum score is 620. That's going to net you the highest interest rate. So you really want to work on your credit.
All right. How does this apply with applying for affordable housing? Does it follow the same principles?
I'm not understanding the question. So for affordable housing, and I'm not an expert on affordable housing. Affordable housing, you must meet certain income and census tract qualifications, I believe. Again, I'm not an expert on that. My field is this, what we're doing right now. But you're still going to have escrow. You're still going to have private mortgage insurance, taxes. So it's probably pretty similar.
Okay, I was talking about if you never borrowed a home for the first time home buyer. Okay. I was talking about if you never bought a home for first-time buyer.
So first-time home buyer allows you to put 3% down. I'm not fully understanding your question. I'm not being deliberately obtuse. I want to answer you. Maybe we need to have a conversation if you want to email me, and then you know, we can talk about it. I'm just not following your line of thought here, which could be me because I'm not feeling 100% tonight. So please don't be frustrated.
Okay. What is exactly the Home Buyer Advantage Program? Does it mean
Home Advantage means that we have realtors across the country that are willing, that have signed up with us to give you back 20% of their commission. Okay, so Home Advantage is the company we deal with. They vet real estate agents. There's criteria that they have to meet. They sign them up so that for our members, they will give you 20% back of their commission. Because realtors have to pay for their leads, or they have to, they have to work and establish themselves, a name for themselves in the industry, and they get a lot of referrals. My membership is a new membership to them, and they're quite happy to get leads from us and to give you back a portion of their commission. So it's a win-win for you, our member. It's a tremendous member benefit.
All right, excellent. Can you please expand on the no down payment?
Okay, so low down payment is 3% down, which we've been talking about this evening. No down payment is where you literally finance the entire cost of the home. You're still going to have closing costs. So even with low or no down payment, you still need cash, right? That's the point of this whole exercise, is I want you all to be prepared. The desired down payment is always 20%. That's when you have no PMI. Let's face it, nowadays, a lot of people don't have 20% to put down, not with the cost of housing in the country today. So that's where the low, no down payment come in.
All right. How long do you have to be working to purchase a home?
So we always ask for your last 2 years taxes, or W-2s and pay stubs if you're a W-2 employee. Let's say you just graduated college and got a job in your field, and you've only been working for a year or 6 months. We'd ask for your transcripts to prove that you just got out of college or you just graduated, and we would go from there.
Okay. Next, between getting an FHA loan and getting a no down payment loan, which of the two has more restrictions?
So I'm not an expert on FHA. I know they require 3.5% down. I know that their MIP, or mortgage insurance premium, is higher in most circumstances than PMI, but I would say probably they each have their own different quirky restrictions, but that's a very broad question for me to answer in this forum.
Does Affinity offer first-time homebuyer programs?
So that's the 3% down. We do. We offer a $500 rebate for first-time home buyers if you open up or have a AFCU checking in savings, and if you have your mortgage payment automatically debited from your AFCU checking account.
Okay. If you're married, can you still qualify to get approved for an FHA loan, or is it wiser to be single?
I've never, again, not an expert on FHA. I've never heard that. It's bad to be married. I'm not real sure. I would guess check with an FHA lender.
Okay. How long after Chapter 7 can I get a loan, an FHA loan?
Again, not an expert on FHA. I know Fannie Mae requires 4 years with extenuating circumstances. I think FHA requires 2, but you really have to check with an FHA lender.
Okay, next, does Affinity have any prepayment penalties? For example, paying an extra $1,000 a month towards principal?
We have no prepayment penalties, and I encourage my members always to prepay.
Okay. What if your spouse's credit is 620 and yours is 700? Does that mean that we will get a high interest rate?
That is correct. So Fannie Mae, Freddie Mac, they use the low middle score. So let's say I have 800, 850, and 825, and my spouse has 600, 625, and 630. They're going to use 625. Okay, it's low middle score.
Okay. $349,200 is the average loan amount at Affinity, but what income level is it based on? Am I assuming this applied to homes in New Jersey? Because where I live, homes are an average of $500,000 or more.
Okay, a loan amount is never based on an income level. I didn't talk about income at all here. I just talk about the numbers in our average loan amount currently, right? We do a lot of loans for 500 and more here as well. I was just using an average to prepare you for the 7%-ish in costs and fees.
Yeah, the higher the price, then those fees will also go up.
Correct.
We're just using it as an example.
I'm using this as an example, yes.
Okay. Is it advisable to start the process of buying a home now with the current interest rate? Will the rate go down, or is it better to wait until it goes down?
So that depends on you and your timeline. If you're renting and your lease is up and you really want to be in a home of your own, then you should look into purchasing a home. I always encourage having a conversation with the loan officer. That's what we're here for, right? We're here to help you. We want to help you. And you can talk about your budget, your timeline. Do you want, nowadays, a lot of people are not buying starter homes. They're buying, their home that they're going to be in for, 10, 15, 20 years. But that's a personal choice. It's up to you and your unique needs. So for me, and I know this, I say this a lot, talk to a loan officer. That's what we're here for. We want to help you. We're happy to help you. If I didn't answer all the questions, I'm sorry. Please email me, Carolyn M @affinityfcu.com. I will answer you. I answer every email I get, either same day or very next day. With that, any other questions, Oscar?
Thank you, Carolyn. I do not see any other questions being asked this afternoon. So at this point, I would like to bring this webinar to a close. I want to thank every one of you. There's still 46 of you connected. So I want to thank you for staying all the way into the end. These webinars are designed to provide you with the tools and knowledge to know what to expect through the process. So I highly encourage all of you to attend part 2, 3, and 4. Now, if you register for part 1 for this part, you don't need to re-register for the other parts. You will get an email the day before and an hour before the next webinar to remind you that it's about to start. And I highly encourage everybody to receive the rest of the information provided through the series. Also, there's another question that just popped up. I don't have a rental history. Will I be eligible for a home loan?
Yes. It doesn't always go by your rental history. You have other credit. Think about it. If you're someone who lives with their, you live with your parents while you were in college and got a job and you want to buy your first home, you don't have a rental rental history. We lend to those all the time. So yes, you can.
Fantastic. Very good. Thank you so much for that last question. So as I was saying, you guys will receive a follow-up email tomorrow with the link to be able to rewatch this presentation and the information for the following sessions. This webinar series is going to happen every week for the next 3 weeks after today. So it's going to happen on Wednesdays at 6 p.m. That way you guys can mark your calendars. Part 2, 3, and 4 will be the next 3 Wednesdays at 6 p.m. But as you guys register for this one, as I just mentioned, you guys don't need to re-register again. You guys will receive the reminders to let you know that the next part is coming up. With that said, Carolyn, do you have any parting words?
Thank you for bearing with me throughout the technical difficulties. I hope that you found this information useful. Please do email me. I'm happy to hear from you. I'm happy to help you in any way I can. And I hope to see you next week.
Fantastic. And also, I just wanted to add, if the marketing department is unable to add all of those links that I shared in the chat, I'll be sending you guys an email directly from me with all of these different resources that you guys can take advantage of, okay? With that said, thank you so much, everybody. Hope to see you guys next week and have a great evening. Bye, everyone.